I'm Stefan, a CPA here in Canada. This video isn't personalized financial advice, but it explains the deductions and credits Canadians most often forget to claim on their tax returns and how they can make a difference in what you owe or your refund. So, the first credit that most people forget is your eligible medical expense. So, this one is actually a fun one because there's a lot of confusion around what is eligible, what is non eligible, and the amount that you can claim. So, here, the one really great thing about the medical expense is that the CRA actually provides you a list of common medical expenses. So, if you weren't sure whether something could be applied, you can just find it through this filter system. It asks you here, is it eligible? Is a prescription needed? Is certification writing needed? Is the form T2201 needed? Okay, so for example, if we look at ambulance service, let's say you had to pay to have an ambulance come pick you up, we can see here that it is eligible. Is a prescription needed? No. Is certification? No. Form? No. So you know that that expense is eligible. But if we look at athletic or fitness club gym fees, let's say you wanted to get active, and you think that's like a medical expense, you're worrying about providing a better diet, going to the gym, trying to just get healthier, that would not be eligible. Okay. Now, one of the big parts of confusion really is kind of cosmetic changes. So if you had cosmetic changes done, for example, maybe you had plastic surgery, then we have to ask ourselves, would that be eligible? Would that be eligible? And the answer is it depends, okay? So you would type in cosmetic surgery, and then we would go through what it says here. It says cosmetic surgery, generally expenses solely for cosmetic procedures are not eligible. However, if it is necessary for medical or reconstructive purposes, related to abnormality, personal injury resulting from an accident or trauma, it could be eligible. So if you're doing this just for beauty, to enhance your looks or whatever, then it's not. But perhaps, you were a burn victim, in some sort of accident and you needed to get plastic surgery done, then it would be. So you can see how helpful this website really is and how this can actually help you decide whether you should claim it or not without having to think too much. Okay. Now, what's very important is the amount. Okay. Now, the rule here is the lesser of two amounts. So whichever is smaller, you need to have at least that amount of medical expense in order to be able to get a credit for it. So it says here 3% of your net income or 2,759. This was for 2024. This amount has gone up for 2025. So we'll need to look. This hasn't been updated, but you should know when you do your return, it'll tell you what that amount is. But yeah, so it's 3% of your net income or the amount for 2025. So 3% of your net income, if for example you had 100,000, that would be 3,000. So this number would be lower. But if for example you had 50,000, that would be 1,500, 1,500, then that would be the acceptable amount. Okay, so if you have a small amount, for example, $100 of medical expenses because you went to the dentist, that would not suffice, and you wouldn't be able to claim that. So that's kind of the first credit that most people forget about. It's an interesting one. The second one here is moving expense. So if you moved to a new home for work or to run a business out of a new location, or if you've attended a new post-secondary program as a full-time student, then you could possibly claim claim moving expenses, not medical, moving. Your new home must be at least 40 kilometers closer to your new work location or school. So you need to have those two things. So if, for example, you were relocated, let's say you were working out in Montreal at a job and then you had this big promotion and they told you, okay, we need you in BC. Well, you're not going to be able to go from Montreal to BC there and back every day. You're not going to fly there every day. So you're going to have to get a new home, right? Over in BC, you're going to have to relocate. And then relocation can be expensive, right? And so if that's the case, you need to figure out what expenses you can claim here, and there's two sort of ways you can claim it. It's called the detailed method or the simplified method. In short, the detailed method is making sure that you have all the invoices, all the receipts for all your expenses, whereas the simplified method is kind of the calculated method that CRA gives you, that is more on a daily rate basis, and excuse me, and it doesn't require so much documentation. I would say documentation is the best word, but you can go through and look at both of these and see which one is better for you. Here you can see, transportation and storage costs such as packing, hauling, moving, insurance, all these things can be, as well as vehicle expenses, meals, accommodation. Let's say you have to be in a hotel. All these different things can also be claimed. Temporary living expenses for a maximum of 15 days, or it's temporary lodging, cost of canceling your lease, all these different things. And then you have things that are not allowed. So anything where, if you had a loss from the sale of your home, expenses for work done to make your old home sellable, these would not be allowed. Okay. So there's a lot here, a lot of information. That's the second one. If you had, moving expenses, definitely something to think about. The third one would be your disability tax credit. If you have some sort of disability, you can get a pretty generous credit from the Canadian government. Again, there's a lot of information here regarding the disability tax credit. It's actually not it's not super straightforward. You do have to apply for it and get approval, which in this case is it's a two-step process. So you need to be approved by a medical practitioner, and then you also have to go and be approved by the Canadian government. So that's the form T2201. That's the disability tax credit certificate. As you can see, they're having some delays here. Okay, so you can check the processing times. But essentially, if you had any sort of disability, you can go down to these sections to see what is it, how does it help, who is eligible, how to apply. So it's that two-part application we're talking about, and how you claim it. So, who is eligible, you kind of want to see what is the eligibility for that. So it says here you have severe and prolonged impairment in one of the categories, and significant limitation in two or more categories, right? That's not up to you though. You will need to have this, you'll need a medical practitioner essentially say that you fall under one of these categories, okay? And then when you are trying to apply for it, you will need to have these medical practitioner to certify your impairment, and then you'll need to submit it to the Canadian government. The submission, generally, it's recommended to submit it, fill out the application before you submit your tax return. Okay, so there's quite a bit of information here around the disability tax credit. This would be probably the most complex credit so far that we've seen, and definitely the most challenging one to claim, because you need to go through that application process before you can claim it. Whereas these ones, you can claim medical and moving expenses, you can claim without any sort of approval. You just need to make sure that they're eligible and that you have the receipts in case you get audited. Okay, so moving on to the home office expense. So the home office expense is one where, if you're working from your home, nowadays that's not uncommon, that a lot of hybrid or, fully remote positions where you need to work from home. Obviously, working from home is good, but it can be expensive. You'll need to pay certain fees that you wouldn't be claiming otherwise, right? So there are some sort of home office expenses for employees that can be claimed. And then the eligible criteria, all of it is it's a checklist. So you need to have all of the following conditions required, and then you just go through each one, and you can see that when you have all of them, you are eligible, okay? But if you don't have all of them, you need to meet all of the requirements. So you go through all of them here. So it says You must be required to work from home. This does not have to be part of your employment contract, but it is written or verbal agreement. Okay, this part or is not anymore applicable to us. That was during COVID. You are required to pay for expenses related to the workspace in your home. So that means that you need to pay out of pocket for that. Okay. That means you need to pay out of pocket. You work for more than 50% of the time from the workspace in your home for a period of at least 4 consecutive weeks in the year. So essentially you're working mostly at home, more so at home than not for at least 4 consecutive periods. Your expenses are used directly in your work. And you, for the most important one here is that you have a signed copy form T2200. Once you have that, so this form has to be actually given from your employer. Okay? It has to be signed and given from your employer. Otherwise, you will not be able to claim the expense, and you cannot claim any expenses in which your employer reimbursed you. So you can't, have a reimbursement by your employer and still claim those expenses at the same time. That would be double dipping, so that's not allowed. Okay. Again, there are some differences here regarding whether you are just a regular employee or if you're self-employed. There are some details there. An interesting one following that is interest paid on your student loans. If you had a student loan from the Canadian, essentially government, so the Canada Student Loans Act, Canada Student Financial Assistance, or the Apprentice Loan Act, then and there's interest charged, then you can also claim it. You can claim that interest and get a credit for that. So essentially that was the interest paid on your student loans. Another deduction that most people forget and didn't know actually was that you are allowed to claim childcare expense under certain circumstances. So this deduction is a little bit more complicated, and there are more rules revolving it around it. But essentially, if you and your spouse, aka the parents of the child, if both of you need to work, or perhaps one of you is working and the other is doing full-time school, and there's no one to look after the child, and you have to pay either a nanny or boarding care, child care, anything like that, then you will be able to claim a deduction for those expenses up to a certain amount. Okay, so there are some tedious rules here that we're not going to get into, but in theory, if you have children that are eligible to claim these expenses and you yourself can't look after the child because you're working full-time or in school full-time, then you'll be able to claim that deduction. Another deduction that is mostly forgot about is carry forward amounts. So for example, let's say that you lost money on, trading stocks maybe 5 years ago, and you invested heavily in one stock and they went under, so you lost your entire investment. But then this year, 2025, you made a good trade, and you made some of that money back, right? That would generally be taxable. But then you remember, okay, I made this loss in the past. I'm going to carry that forward and take a deduction on the capital gain this year. So carry forward amounts, that can be, capital losses, that could be also RRSPs. So if, for example, you weren't claiming any RRSPs by contributing to it, you can contribute to it now. That will not be lost. So that's another deduction that can save you quite a bit of money on your tax bill that is often forgotten about. Another interesting one is your eligible tuition fees. So this is a credit that you get. And again, there are some certain requirements here. If, for example, you were enrolled in an institution in Canada, that you were taking post-secondary educational classes, then you will be able to claim credit for the tuition that you pay. But again, there are some things here. You'll need to get an official tax receipt from the institution, and it has to be more than $100. So in general, you don't really have to think about this because you will get a slip from the educational institution, and then you'll know the amount that you can claim. An interesting thing about this one though is that you can actually transfer that credit to your parents for up to 5,000 in the year. So what does that mean? That means that if you had credit available of 10,000, 5,000 can be transferred over to your parents, and then they can claim that credit on their tax return. So that one, that incentivizes parents to help out their children by paying for their education and putting them through school while being able to claim the tax credit from their child directly. That's that is the tuition tax credit. Just looking at another one that is often forgot about is your union dues and your professional fees. So that would be a deduction. So if you're like me and you're a CPA, you will have to pay CPA dues, and that is considered professional fees. So I'm able to deduct that each year. CPA will generally send me the amount that I paid in the year and the amount that I can deduct. For many of you, union dues will be applicable. Again, your employer will be responsible for, sending you that information, seeing how much you paid in union dues, in which you can deduct. So union dues and professional fees is one that is often forgotten and not claimed if you file your own tax returns and you don't use an accountant, which can save you quite a bit of money. Um, you know, it is definitely one, because it is a deduction you should be claiming every single year if you've been paying those fees. Okay. And then the last kind of deduction that I want to speak about is any employment expenses. So this is very related to the home office expense we were talking about earlier, except this can also be, vehicle expenses, any other expenses related to your job that you were required to spend in order for you to work. Again, you will need a signed T2200 from your employer. Otherwise, you will not be able to claim this deduction. So very important here, when you are filing your tax return, knowing which deductions you can take, which credits you should take, very important. Whether it is medical, moving, disability tax credit, all of these play a pivotal role in bringing down your tax bill, which again, at the end of the day, is the most important part. And if you're interested in doing your taxes and not having to pay an accountant to do it, then you want to make sure that you apply all of them that you can apply, because you want to get the biggest deduction and the biggest credit in order to keep that tax bill lower. If you want clear, practical Canadian tax guidance explained by a CPA, subscribe to the channel. I'll continue to add more helpful resources and tools in the description as the channel grows.